Here's more perspective before trade actually opens up today. Anand Tandon, CEO of JRG Inditrade, joins in. Anand, morning. It's been a rough couple of days. Are you expecting more weakness going into the second half of November?
It's quite possible, and obviously, the market has shown first signs of crack. And to the extent that it's actually holding up, I think it is quite positive, because considering the slew of issues that are still due and the fact that we are coming towards the end of the calendar year, where usually there is some level of profit booking, I think the market's doing pretty much better than what it would have normally done, which really shows you the level of liquidity in the markets globally.
Anand, morning. If you had to put a number to the base of the market, would 6,000 be it in terms of any more selling pressure?
Well, that's very difficult to say, Sonia, because all said and done, it's not something that we can determine sitting in the studios here. It all depends on how the world economic scenario pans out, whether there are any further shocks. And as I've maintained before, just because we've stopped talking about them, doesn't mean that the uncertainty in the global markets is still not present. The good part is, however, that the earnings growth so far is on track, and again the question to ask really is how the second half is likely to be. I would just reiterate what I've been saying earlier, which is that the second half is going to be a lot more challenging, because we've already seen margins somewhat under pressure. So I don't see a possibility of an increase in the earnings estimate for the rest of the year going forward, which means that valuation-wise we are still reasonably stretched. As opposed to that, of course, we still run into negative real interest rates. So none of those factors have changed actually. So I think the market's pretty much at a level where from here on for it to develop fresh legs is going to be difficult. At the same time, on a relative basis, we continue to attract fund flows. So that's where we are.
Would you start buying though, Anand? You've come off about 4-5% from the recent top. Is it attractive enough to start putting some money to work, or you think you'll find better prices?
So I think near term possibly yes. I think the way the markets usually work is the first 5% drop is a good buying opportunity. The next 5%, if it were to fall beyond that, is when you start worrying about where the market will be. And if it goes below 10% from the top, that's when people withdraw from the market. So I would imagine that right now it's the first stage where you are looking to see if you can get back into the market, at least for the next few weeks.
So if you wanted to get back, what are the sectors that you would be looking at for buying now?
Obviously the ones that have fallen the most, and obviously again, as your previous speaker mentioned, those where the short positions are probably the highest, because that's where the elasticity is likely to be the best.
How do you approach banks, Anand? Because that's probably what has rattled the street a little bit last week when some of the banks fell 10-12%, the large names. Would you stay away, or do you see this as an opportunity?
So as I said, if you're looking at purely on a bounce basis, I think it's an opportunity to get back in. But I think banks have come into a bit of a issue now, because credit growth is still somewhat subdued. The liquidity situation is very tight, and most interestingly, the yield curve now has completely flattened more or less. There's hardly probably less than 100 basis points difference between the short end and the high end and the long end. In that kind of scenario, it becomes extremely difficult for banks to increase margins, because clearly you cannot be borrowing short and lending long anymore, especially when the long dated the tenure of lending is not really increasing, because for some reason people are not really looking to borrow long term. So in that kind of scenario, I think you will find that banks' profitability will remain at best flat, definitely not likely to improve from here. Add to that the fact that the provisioning is still an issue, and we've seen SBI again asking for a further extension in provisioning time, which is not necessarily very good news from a balance sheet perspective. So overall, I think it's again a mixed bag. Not sure that you have a direction there. So purely on a technical basis, probably a bounce from here.
Anand, what would the call be on commodities like fertilizer and sugars, because both of those spaces are seeing significant amount of interest, and now we're seeing some attractive levels in sugar prices as well. Would you choose to dip into any of those?
So broadly, commodities is definitely a good place to be, and sugar, I had said this before as well, that the US sugar inventory is likely to be a bit lower this year. So overall, I would imagine the prices will be reasonably firm. Now it's always difficult to time when it's already priced into the market and when it's not. But so rather than perhaps trading some of the sugar stocks, you may want to buy sugar directly. Fertilizers, of course, I think is a slightly more longer-term structural story. The new policy has been extremely beneficial for most of the fertilizer companies, and I think going forward, that's probably one of the few sectors where the sales to market cap, for example, is still very much lower than it is for most other sectors which require such heavy investments. So that's a sector which I think I would be longer-term bullish on.
What about textiles, Anand?
Too cyclical, Udayan. I think especially if you're talking about cotton textiles, I think the second half is likely to be quite tough, unless of course the crop in terms of cotton is very good, because we've already seen a large increase in cotton prices and we are already beginning to feel the pressure in terms of increasing the yarn prices. I think consumers are beginning to show some signs of restraint in terms of accepting further increase in prices. So I think the margins for the next half are not likely to be so good, barring of course an excellent crop and lower cotton prices, but slightly that you may allow some exports, and in which case there is obviously not too much likelihood of a margin increase.
Anand, if you had to bet, would you say the risk reward is against the market now or still for the market?
Well, then I think it depends on your time frame. I think even if you look at a couple of weeks, I think the risk reward is still against you. As I mentioned, there is nothing which causes you to believe that the earnings growth will be any higher than it has been in the past. Interest rates are still ticking up, and in my view still need to tick up far higher than where we are. We still have a policy which is very, very loose. And there is, except for inflation, I don't see now the second half giving you any great volume growth. So I think whatever growth will happen now will happen because of prices, and that's not a very comforting factor. So overall, I think also on a relative global basis, India has been one of the best performing markets even among the emerging countries. So on a relative basis, if you were an international fund manager, I think you would need to perhaps rebalance your portfolio and take some money off the table from India. The pipeline for IPOs continues to be very large, very robust, and therefore again will take out money from the secondary market. Nothing that I see can significantly re-rate the market from here, at least in the near term.
So, Anand, what would the call be on some of these ADAG stocks now? Last week, or rather in the last 10 days, there was a huge rally that many of these stocks saw. Anything particular that you're watching out of?
I don't think that the fundamentals have changed in any of them. I think to some extent it is a question of them trying to raise money overseas, which perhaps causes these intermediate rallies. But except for the erstwhile BSEs, I don't see any others which have a business model which is doing exceptionally well at this stage to warrant any kind of re-rating.
Okay, Anand, thanks very much for your time today.